Welcome to the Property Profits Real Estate Podcast, the show where real estate investors talk strategy, capital, deals, and growth with your host, Dave Dubeau.
Hey, gang. Chances are when you got into real estate and real estate investing and you saw everything that's involved, one of the last things you thought about was insurance. It's not something most of us like to think about. Like, it's all about worst case scenarios and what happens if, et cetera, et cetera. However, it is vitally important, not for any kind of real estate, any size of real estate deal, but especially once you start getting up into multifamily, your insurance can really kind of make or break the deal, especially these days with margins being so thin and insurance rates going up. Any savings you can get on your insurance dials right into the bottom line, into the NOI, and into the value of your property. So today, our special guest, zooming in from Arizona, is Guffy Wright. He knows a thing or two about this because Guffy works for a huge insurance company, but he is 100% focused on real estate investors, portfolios. And I love the fact that he's so specialized in this. This is what he's been doing for the last 15 years. That's what he's got dialed in. So Guffy, welcome to the show. Great to have you.
Dave, it's great to be here with you, man.
Yeah. All right. So give us a little snapshot of you, insurance, and who your perfect client avatar is that you can help the most.
Yeah, my ideal client is somebody with 1,000 doors and they're in growth mode. And we define growth mode as someone that's adding between 300 and 2,000 units a year. I started selling commercial insurance at age 22, dropped out of community college and had no plan B. And I started cold calling, hustling, and the industry that respected that the most was real estate. Okay. They respected the hustle. I felt like I cared about their deal. They cared about their deal. And so we kind of bonded early on that way. And then I got kind of fascinated and hooked on how just $15,000 of savings could increase the asset value by $250,000 at a 6% cap. And when I learned that, I was hooked. So from then on, I built a whole practice group around helping owners convert insurance decisions into equity outcomes. And in the last 10 years or so, our insurance premiums in our practice have grown from 50 million to well over 150 million, primarily focusing on that.
Very nice. Well, that's really, really smart, just kind of specializing in that, because most people who get in insurance, it's like anybody with a pulse will talk to them. That's what it's all about. Okay, now you talked about focusing on clients who are in growth mode. I get it. You're in a business. You want to be doing more business. You want, the nice thing about insurance is it's a recurring model. We need to renew every year. Every year you got the property, you got to do it. But these days, as of the time we're recording this in 2026, especially in multifamily, people are taking a crap kicking in the market. So are you seeing as many people in growth mode as you used to, as it slowed down a bit? How has that changed things for you guys?
Yes, it has slowed down. I mean, 5-6 years ago with interest rates when they were really low, we saw a ton of growth. But there are still firms out there and people growing. A lot more in the affordable housing space seem to be growing quite a bit, and the build to rent sector. But there's still people building. But the old value add 1970s, 80s built, those are tough to move right now.
Yeah, definitely. Okay, now on the insurance side of things, Guffy, again, this is one of those things that most operators aren't over the moon excited to look at this, excited to talk about this stuff. As fun as you are, what's the value proposition you bring to the table for folks when you start working with them?
Yeah, a few levers we like to pull. I think one of the biggest ones is we have a lender waiver process, because we learned early on that our clients really value and really care about their debt. And what the lender dictates on your insurance a lot of times dictates what you buy.
Okay.
And so we thought, okay, how can we give back control to the property owner, even though the lender's kind of holding the bag? And so we hired a lender liaison, someone that specializes in these type of loans. We developed a lender waiver process together with Fannie Mae and Freddie Mac and some other loan servicing companies, because I know I alluded to it earlier, but I remember I had a client closing on a $50 million acquisition in Florida. And the day before, the lender forgot to check a box or whatever, and was costing my client about 30 grand premiums.
Wow. Yeah.
Now, I first thought and then my client calls me very upset. I'd never seen him act this way. I was actually kind of caught off guard. And I said, hey man, help me understand. This is 50 million bucks. If you don't have 30 grand, like, why are you buying this? And he educated me. I mean, and all your listeners know, he educated me that he had a 6% cap rate, and that was going to cost him $500,000 of value based on everything he had told his investors, everything he had set up, went through all the underwriting. And I thought, oh, okay, that's really important to you. And 500 grand is important to just about everybody. So what can I do now to help and get this done? And so we got some things negotiated out on the lender, some other things that we got done. And then we were also able to move some other things around too, and ended up saving him 60 grand in 2 days. And so he went from a $500,000 hit, he thought, to now was swinging now the other way to potentially, a much larger distribution for his investors. And that was when it really, really hit me. So I would say lender waivers is number one value proposition.
Well, so explain what that means exactly. So if a lender signs this waiver, what does that? Yeah. What does that actually mean?
When you get your loan, or before the closing of the loan, the owners will get a insurance requirement documentation. Typically, you send that to your insurance agent, and then you put them in touch with your lender, and you say, hey, make sure this all makes sense. It doesn't mess with my closing. Okay, great. Right. Yeah. We take that insurance document or insurance requirements, we review them, because we know these lenders, they don't know anything about insurance. They're just trying to check a box.
Hey there, if you're a capital raiser, a syndicator, or a fund manager, and you're looking for a steady flow of incoming accredited investor leads, then go ahead, grab a free copy of my new book, How to Get 20 Accredited Investor Meetings Every Month Without Cold Calling, Networking, or Chasing People. You can get that at 20accreditedinvestorsbook.com. Again, that's the number 20accreditedinvestorsbook.com.
They're trying to cover their butts is what they're really doing 8 ways to Sunday, right? So
exactly. Yeah. And we look at those insurance requirements and we say, well, this actually doesn't matter. You don't really need this. Or do you know that you want this? We try to negotiate anything out that you don't want or don't need.
Yeah. So for example, if it's a property in Phoenix, hurricane coverage might not be all that important or something like that. Is it kind of stuff like that, or what is it? It
is. And something simple too is like every lender requires full replacement cost on your property, which you definitely should carry if you don't have, 1,000 or 5,000 units shared, but we can't insure your foundations. Well, most owners don't know that. And so the lender doesn't know that either. So the lender is requiring full replacement cost. We go to them and say, okay, you think this is $10 million to replace? It's actually 8.5 because foundations are excluded. And they go, oh, okay, yeah, that's right. So just things like that ultimately really, really move the needle from an insurance standpoint, because instead of just us calling and saying, can we save you money? It's more about protecting your NOI and increasing that asset at the same time. And then on your worst day, when you do have a claim, you want to make sure that it's not bad either, because nobody's called me in the middle of a tough claim and said, hey, can you shave 10% off this premium? Right? And so you always have to know, value's kind of always in motion of what people value. It's all contextual.
Yeah. Okay. So helping your clients with the waiver, that's huge. Like coming at it. I love what you're saying there. Coming at it from a net operating income point of view. Like not very many insurance guys really understand that unless they're an operator as well, or an LP, unless they're involved in the deals. So the fact that you've dialed that in goes a long way to showing that you are definitely a specialist in this. You can speak people's lingo and you understand at the end of the day what's important to them and why. Okay, so Guffy, what are some of the biggest mistakes you see operators making when it comes to insurance?
One of the largest mistakes, no matter what size you are, if you have more than one insurance policy, you should absolutely get everything on one renewal date.
Okay.
Every portfolio is different, where I can't just recommend a master policy is best for everybody, but I can recommend you get everything on one date. That'll allow you as the operator and your insurance broker team to do their best work. Because if you're renewing something every 2 months or every 3 months or whatever, there's just going to be friction in the relationship, and you're just going to be tired of dealing with insurance and hate dealing with it because you don't feel like you're winning. And real estate people most of us don't like to not feel like we're winning in this game of business. And you cannot win if you renew every 60 days, period.
Yeah, it just kind of drags you down because you have to go through all this crap for different properties every couple of months. And so you recommend batching it all up.
Correct.
Get it all out of the way in one fell swoop and be done with it once a year. So
that's one thing. And then can I mention one more thing?
You can, but let me ask you a little bit more about that one.
Yeah.
How do you actually line everything up so it's all happening on the same day or in the same?
You tell your broker we are renewing at this time of year now. Make sure all our policies go to that date. You could even get a potentially longer than a 12-month policy, which is nice if you have good rates. But just tell them everything's going to renew on October 1st, so we can budget it for the following year and we have everything lined up or whatever. But just choose that effective date that best suits you and your business.
Okay, and just tell them, and even if something just got renewed 3 months ago, they can, or it's about to get renewed and they can adjust.
Yes.
Okay, makes sense. Okay, go ahead. Sorry, you wanted to share something else.
Yeah, and the second thing is something we touched on is work with a specialist. I mean, if you don't work with an attorney that doesn't specialize in what you're doing. So if you were hiring an attorney to defend yourself, if someone slips and falls at your apartment complex, you wouldn't go hire an attorney that specializes in auto claims. So why are we doing the same thing when it comes to buying insurance? A lot of our operators and owners, they deal with insurance brokers and teams that are that are not specialists, and it makes absolutely no sense. Why wouldn't you deal? And there's plenty of broker teams out there that specialize just in real estate. And man, I don't know why you'd work with the generalist. There's no good explanation somebody can give me.
Well, the generalist's name is Uncle Fred. That's
why. That's it. Yeah, your uncle and aunt, and then that's okay. Your assets worth less because of that. It's okay. Mm-hmm. But just at least you know that.
Yeah.
But those would be the two, I think, biggest mistakes I see is not everyone getting on the same date. And then number two would be not using a specialist. And then the third is just apathy. Like it's just easier to just renew. It's just easier. Okay, 10% higher, 15%. And then all of a sudden 4 or 5 years go by and you're like, wow, why am I paying so much for insurance? It's like, well, either you're not working with a specialist or you just never cared to really treat this like a business and get after it.
Yeah. No, I've been guilty of that myself. That's for sure. So a lot of people are really ticked off with insurance these days because it just seems like they're getting raked over the barrel kind of thing. Are there any proactive things operators can be doing in 2026 to, just get a break on some of those rate hikes?
Yeah, there's a few things. And the larger you are, the more options that you have because, saving 10% on $1 million is going to be more than saving 10% on a couple thousand. Mm-hmm. But what our large clients do is we put in place something called landlord liability. And that basically means any fire or any water damage that is inside the unit that the tenant is at fault, we have insurance for the tenant that the tenant will pay first dollar on that, and that insurance will pay. So our owners can have larger deductibles. They can charge for that insurance too per month for those tenants, and it can actually be a little bit of a revenue stream for them as well. So that's one thing you could do. And another thing in 2026, it may surprise a lot of people, but right now property rates are going way down. A lot of our clients are saving 20 or 30% on their property insurance right now. So rates are going down. That is after 5 or 6 years of total just rate increases.
Well, are rates going down because property values are going down in multifamily, or is it just
it's not. It's just because the last 2 years we haven't had a lot of catastrophic claims.
Okay.
they charged too much over the last couple of years, and now there's more competition back in the marketplace.
Okay.
And so property rates are down, but liability rates are still flat or increasing. People are still getting sued in this great country of the United States more than ever. And so liability rates are not going down, but property rates are.
Okay. Good to know. Good to know. Guffy, this has been really interesting. Congratulations on dialing it in and really focusing on this niche. I think it's very, very important. So you're based in Arizona. Do you work nationwide, or do you just focus on folks in and around Arizona?
I do. So 90% of my book of business, my clients, they are outside the state of Arizona. And the reason is real estate, they can have a loan officer in Chicago and an attorney in California. They work really well in multiple states, and so do we. So I work with anybody that has at least 1,000 units and wants to grow.
Very good. All right. So if people want to connect with you, find out more, maybe get your second set of eyes on what they're currently doing with their insurance, how can they reach out to you?
Yeah, reach out to me on LinkedIn. And you can book a 15-minute call, or you can go to my website that's on LinkedIn. So much of this, Dave, is about timing. No one wants to think about insurance until, it renews, right?
They need it. Yeah.
They need it. And so much of the business is about timing. And so what we've done to help with timing is you go to LinkedIn, you go to my LinkedIn page, and you can message me your renewal date. And I will take that information and contact you at the appropriate time. But yeah, go to my LinkedIn profile, and would love to have a conversation and see if we can help you.
So I imagine there's not too many Guffy Wrights. Is there any other way they can find you on LinkedIn, or anything that makes them stand out more?
There are no other Guffy Wrights. Guffy it's my parents didn't love me when I was born, but now we have a great relationship where we're all healed.
I think it's a pretty cool name, actually. That's memorable. Better than Dave. My goodness.
It is different. But yeah, would love to connect with any owner that wants to look at their insurance strategically and not as an afterthought.
Fantastic. Hey, Guffy, good to meet you. Thanks for being on the show.
All right, Dave. Appreciate it.
All right, everybody. Take care. We'll see you on the next one.
Thanks for listening to the Property Profits Podcast. If you'd like to be a guest on the show, apply at daveinterviews.com.